Well, all eyes are turning towards 2026, I guess. That is what Scott Bessent said last night, and what you are hearing from many in the administration. They are expecting explosive growth in the first quarter of next year as they continue to deal with some affordability issues. A lot of this not caused by them. But the reality is they're in charge, and people are going to point to them if they can't get this thing figured out by the midterms next year. Charlie Gasparino, Mizzou's finest graduate, and also now with the Fox Business Network. You see him on Fox News all the time as well. He had a great story last week in the New York Post that the president privately is admitting he's got an affordability issue with tens of millions of Americans, and he's trying to figure out what to do with that. So, Charlie, it's great to have you here. What happened in that meeting between the president, and where does it go from here?
Well, let's not bury the lead here. What did Bessent say last night? Is he predicting 6% growth now as well?
I saw the Brett Baer interview. I was too focused on the $2,000 tariff checks I can't get over. But did he say 6% growth as well?
I don't know. I mean, he is predicting. I mean, they're all running around predicting massive next year. And they better hope so because, if they don't get the growth and stuff is still very tight in terms of affordability, if inflation is, at 3 or higher, they're going to have a problem. Republicans going to have a problem at the midterms, like a big problem. So, I mean, the whole push and pull of the Trump economic agenda was essentially to rewrite trade deals and do it all at once, which I think we'll see if that was a mistake. That means put tariffs on foreign goods. And then sort of lay off the regulation and, have much more free market domestic economic policies of lower taxes. The supply side push of that's the lower taxes and the deregulation hasn't really kicked in to sort of, at least yet, to alleviate the negative parts, because you're going to get negative parts when you do trade deals. You're going to get higher prices. When you disrupt the entire global trade system, that's what happens. It hasn't really kicked in yet. And, it may kick in at the beginning of the year. They better hope it does, because if it doesn't, there's going to be a political problem here. I mean, listen, there's so much good that Trump has done in his, first year in office. I mean, let's face it, he's stopped wars. He's closed the border. But, people are very short-term oriented. If the American voter is sitting there with high inflation, they don't care. That's like a tax. When you put a tariff on a good, you're taxing the person who buys that good. Now, you may say it's worth to tax them because we're rewriting trade and we're trying to bring jobs home and all that. I mean, that's their theory. But you are taxing the working class of this country who can't speculate around this. So they better hope we get some growth. Because they're in kind of a little bit of a pickle here.
How do you square this with the guy that we have on this show with regularity? I know you know him well, Steve Moore. He's a former economic advisor to the president during his first term. I saw him talking about this yesterday on Fox Business, and he's like, hey, markets are up, 401ks are skyrocketing, real income's up $1,200 since January. If we can get 4% growth, we can shrink the national debt. Life will be good in 26. Are you buying that, Charlie Gasparino?
I mean, I like Steve. My friend Larry Kudlow feels the same way. The one thing I will tell you with people like Steve and Larry is that never before were they like anti-free traders. I mean, throughout their careers, they've always been people who basically were against using tariffs, at least across the board, and not strategically. And that's kind of what Trump has done here. And they may be right. I will say this, though, and here's what doesn't make sense to me. Your real incomes, if they were really up as much as he says they are, the president's approval rating on the economy would be higher. Whatever he's saying is not being bought by the American people right now. I mean, people feel that their purchasing power is being eroded. There's no doubt. Look at every poll. Never before have you put a tariff on something where there isn't some economic impact. We should point out that Trump didn't cut taxes. what he did was in the big, beautiful bill, which didn't really do much in terms of cutting the size of government, which people like Steve and Larry used to be for, it extended the Trump tax cuts. Like we didn't get anything different, right?
Mm-hmm.
In terms of growth. So,
well, they were going to expire, right? So it prevented a tax increase, theoretically.
That's all it did.
Yeah.
Remember, the economy was baked. It was baked into the economy already.
Mm-hmm.
So I would say that the one thing he did do was increase taxes through tariffs. And if that doesn't have an impact, I don't know what it has to. And now it may be eliminated eventually by productivity growth in AI. Mm-hmm. But even that's a double-edged sword because AI does eliminate some jobs in the short term, right?
Yeah.
So I mean, listen, it's hard to predict all this stuff. It's a dynamic economy. There's a lot going on. Are we better off with Donald Trump in office than Joe Biden or Kamala Harris? Of course, But, there is going to be an economic headwind. Let's see how big it is. But if we do get 4%, 5% growth, that could cure a lot. But no one really, other than Bessent and maybe Steve Moore, that number I don't. I quoted people. The CEOs don't believe it. Mm-hmm. The best they think is maybe 4.
Okay,
maybe.
All right. So then what's going on with the markets right now? I mean, we've had some sell-offs here as of late. Is that just people taking their wins and basically taking some money off the table, or do you think that people are starting to hoard more cash for what could be a rocky 2026?
I just think the AI mania was just overdone, and I think you're getting a pullback on that. Again, and I will say this: do not. I mean, if you get a guest on here that tells you that the markets are up, everything is great, I will tell you that the average 401k is $130,000.
Yeah, it's not Main Street. Yeah,
the medium, right, the one in the middle, is something like it's where 50% above and below. Is that the medium or the mean? I keep mixed up. In any event,
medium. You know it. Yeah, you got it.
Yeah. Walter Johnson at Mizzou would be rolling in his grave right now. If I didn't know that. But my old econ teacher. It's 50,000. Okay, so the markets, people don't care, and average people, are not benefiting from the stock market. That's rich people with some cash, people that it's the 1% or the 5%, I should say. So remember, that's kind of a false indicator when you get a guy on that says that. But just to be clear here, I don't think this is the end of the world. I mean, this is what's supposed to happen. You're supposed to have some sort of pullback from that. I mean, it was crazy there for a while.
Yeah, it was. You're right.
And the video, what was NVIDIA trading at? 1 million times earnings? I mean, I don't know. It was some number that someone threw at me. I was like, that's pretty wild. So it needed a pullback, and a lot of our markets are correlated with tech. So I would just say, don't freak out. I mean, this. I mean, listen, I wish it would go down 10% so I can buy. That's what you kind of want here.
Yeah, that's a good point. That's a great point. So and by the way, these companies now that are involved in AI are not, the .com bubble companies in the past. You know that, right? I mean, that's kind of the difference. NVIDIA, real company. These are all real companies. They're not like just. I covered the .com bubble. Pets.com famously, and many more. These were companies with like no balance sheet. I mean, these are real companies. So remember, this a correction might be good because real company. Amazon corrected during the .com bubble, and look where it is today. That's a great point. So let me end it here, Charlie Gasparino. I've got about a minute here, but I'm sure you saw as we talk about tariffs. And listen, I think the jury's still out by and large on some of these things, and maybe it should have been more targeted, maybe not, who knows. But you probably saw some attention on this piece that was published by the San Francisco Fed suggesting that actually the tariffs may have actually brought down inflation to some degree. Is that just a couple of researchers coming to their own conclusion, or is there something there?
Well, there could be something there that it stifled economic growth because we don't have small businesses competing as much. I mean, the tariffs are a weird thing. It's like, do you remember when we had a price shock in the 70s when you had massive oil prices, right? Increases. You essentially had a price shock on oil, which filtered through the economy. And on top of it, it wasn't from printing too much money. We had inflation based on a price shock, which often leads to stagflation, which means you also get, at the same time, some degree of economic growth that comes down, that does not, you get negative economic growth. That's kind of what happens with tariffs as well. Small businesses, which, account for like 40% of GDP, something along those lines, rely on overseas goods coming from overseas being cheap so they can put it together here. I know this because I speak to a lot of these folks. They have a hard time selling their products. Hence, you get less inflation. You know what I'm saying? The economy declines. So I would just say, they might be right, and it might be a bad thing.
Mm-hmm. That's a good point.
I mean, you can look at this through a rosy lens or a negative lens all day long.
Yeah.
I will just say this. It reminds me of the debate we had during the Biden years. Biden would say, come out, his economic advisors, everything is so great. Everybody, the American people don't know what they're missing. The polls are wrong. The American people don't understand how great things are. The markets are up. This reminds me of like what Steve Moore is saying and Larry Kudlow and people like that. And then you turn around and you say, well, are the American people stupid? Are they delusional? Why don't they feel better about the economy? I mean, because underlying, the markets are some real issues that people like that are just not taken into account, I think. I mean, I'm telling you, those
yeah.
The president's approval ratings on the economy should be a lot higher, and they're not.
Yeah. No, you're right. And that's ultimately, people are going to decide for themselves, not based on what people are saying on TV or on radio for that matter. But Charlie, that's why you're a great guest. You call it like it is, and we love having you back in Kansas City. Thanks so much.
Anytime, Pete.
All right. And I hope that Charlie's former Mizzou finance professor was not listening when he was talking about mean versus median. It's all right.